Hi guys, this is Thomas from FINEIGHT and welcome to the last recap of April 2020. I'm ending with a slight positive result, and overall for the month of April I'm up +3. It's surely not an ideal month, but at least a positive result. And typically with intraday trading, you can expect months like this about once or twice per year. If you are experiencing negative month or around break even more times for the year, I think you should really focus on improving some of the weaknesses you might encounter, because typically you have about half of the month the average, so let's say +10 or +15, somewhere in that range, and then you will have one or two extraordinary months, so let's say +20 to +30%, and then you will have some less positive or even negative, but overall you should never have a losing quarter, you should never have losing 6-month period, and you should never have a losing year. In that case, you should either limit your risk to a minimum and just practice, or you should turn off your trading and get back to the backtesting board, so to speak. So with that little intro, and for the record, my March was +20, so I would say above average. So yeah, it's combined with April, I'm slightly below my expectations, so really thrilled for new month, May, ready to rock and roll. So the first trade today was in a NEO, and to be honest, I've never actually traded this market before, and this was a curious situation. This wasn't my standard pattern, or it was technically at the breakout of the range to the upside, but from the daily, I wouldn't have touched it if it did behave differently after the open. So what happened here? Let me zoom in a little bit. So we have a wide range red bar, and then the very next day straight up engulfing green bar, which the high of which bar were on point with the previous swing high. So you can see there were many people buying, riding the wave of the S&P rising and expecting a huge break over the 32 area, filling the gap and maybe even attacking the all-time highs. Yeah, I think they are all-time highs. Yeah. So today, when the market opened, NEO was down significantly. It was down about, let's say, 10% or whatever. It closed at -11.8, so this might have been like -9%. So typically after this, you would expect a huge move down, as there are large volumes of buyers who bought in this consolidation yesterday and they need to get out. What happened actually was that there were only 2 red candles with above average height, and if you look at the volume, it was very significant only on the first one. This is of course typical, but you would expect it to drop much further. So also the 28 area as a whole number is a great stop loss, and in this graph you can see I have a 50 period exponential moving average on which the market stopped almost perfectly. So when I saw this consolidation and a breakout to the upper side over 28.32, I believe it was, I was thinking, okay, so it wouldn't go down, and there is a huge vacuum from the previous day, so we could at least see somewhere around 29 or 29.50 for the 50% retracement. There is a void there, so maybe, yeah, 29.57 was like a very minor swing low on the way up here. So this was the reasoning. The stop loss was just below 28, so a great risk potential risk to reward. Unfortunately, when it touched the 5-minute EMA 21 period, it then crashed down under the 28, and in hindsight a short would have been a really nice play, but nevertheless this was the idea. It didn't work out. Moving on. So and the second trade I made today was a pretty good one. It was in AMD. AMD really struggled to get past this 28, and so starting actually 28th of April, which was Tuesday, it started to go down, and where should be your target? It should be somewhere around the 52 area, because it's a whole number, it's reasonably close to this swing low, and you can pretty much draw some kind of a congestion here, engulfing all those bars. So right around here on the 2-minute, I noticed a really nice breakdown under 53.10. So my entry was 53.09, got filled at 08, so just one tick stop loss. A slight concern was the 53 whole number, but given that there was a nice consolidation and fake breakout higher to attract new buyers who would then be pushed out of the market with their stop losses and actually adding to the downward momentum, this was a really nice play, and the 53 was not that significant for me. So the stop loss was 1 cent above the 53.40 mark, which was the intermediate or rather short-term swing high, and my aim was to go all the way down to 52, which would be somewhere in the region of 3-1 on my money. That was the ideal case. So as the S&P, let me show you, as the S&P was pushing actually higher, during that time. So, all right. Sorry. So this way we have it all level up. So my entry was right there, Meanwhile, you can see AMD, rather SPY, made a new high, which didn't affect the AMD at all. Then it broke on the way down from the S&P. The AMD broke the 53 mark and continued lower, and even at those times it still moved lower. My only mistake in this trade was not exiting at 52.05, somewhere in that region. My original target was set to 52.02. I set it into my platform and then just walked away because I knew that this was a steady move lower, so my stop loss was way up there. I wasn't concerned about it. And actually, had I been there, you know, if it's tough to say, because you see this double bottom, but then again you are at the 52, so it's very tempting to wait for the break of some 15, 20 more cents and just grab the money and run. So in eventuality, this was after this long way down, this was the final. You can actually see that all the time the angle was like this, and then on the second on the final leg, the angle even increased downwards. So the market was really pushing with everything it had, and you know, at some point it had to reverse, and that point was here about an hour before the markets closed. Then we had a huge retracement. I saw the market then coming down. AMD was still, you know, technically downtrending. There was even a flip area around 52.60, and then it crumbled some more towards the open, and I exited at slightly above 2-to-1 risk to reward, some 40 seconds before the market closed. So you know, really good educational trade, I guess, and the overall result was more than my typical 2-to-1 risk to reward. So overall, I'm very happy, and as I said, looking forward to the month of May. So guys, thank you for watching. Hope you enjoyed, and see you tomorrow with the last recap of this week. Bye bye.